Welcome to part 3 of the chapter Not-for-Profit Organizations. In part 1, we have discussed about the meaning of an FPO, its features, difference between of not-for-profit organizations and profit-earning organizations. In part 2, we have discussed about the final accounts of not-for-profit organizations, wherein we have discussed about the receipts and payments account, income and expenditure account, balance sheet and its items. Now let us start with part 3, wherein we are going to discuss the important items of an FPO. The first one is subscriptions. We know that the subscription is the amount paid by the members of not-for-profit organizations on periodical basis, that is monthly, quarterly, half-yearly or on yearly basis, so that their membership is not cancelled. It is a recurring source of revenue from its members for not-for-profit organizations. It is a main source of revenue of an FPO because it is treated as a revenue item. So this is to be recorded on the debit side of receipts and payments account and credited to income and expenditure account. Since accounts of not-for-profit organizations are prepared on accrual basis, so subscriptions of current year, whether received or not, comes on the credit side of income and expenditure account. How do we calculate subscriptions? This is a format which we need to prepare on the credit side of income and expenditure account. You need to start with the total subscriptions received during the year. In that, we need to add the subscriptions outstanding at the end of the current year and subscriptions received in advance at the beginning of the year. Whereas we need to deduct subscriptions outstanding at the beginning of the year and subscriptions received in advance at the end of the year. After the addition and deduction of these two items, we finally get the amount of subscriptions which we need to credit to income and expenditure account. This is really very important. Generally, a 3-mark questions do come in board exam also. How do we show subscriptions in balance sheet? We know subscription is an income, so any outstanding income will appear in the balance sheet on the asset side. You can see there outstanding subscriptions on the asset side, whereas advance subscriptions, that is subscriptions received in advance, will appear in the balance sheet on the liability side. Let us discuss about the next item, that is life membership fees. Life membership fees is received as one-time subscription from life members. They just need to pay it once and enjoy the benefit throughout the lifetime. Because it is non-recurring income, so it should be treated as capital income. Therefore, it is not credited to income and expenditure account. Rather, it is added to capital fund, or it can be shown separately in the balance sheet on the liability side. Next is entrance fees or admission fees. Admission fees or entrance fees to be treated as a revenue income, and so it should be credited to income and expenditure account. But if specifically it is stated that some amount of entrance fees or admission fees is to be capitalized, then we need to follow the instructions. Whatever the amount is to be capitalized, that amount will go to balance sheet liability side, and the remaining amount will be treated as revenue income, and so it will be credited to income and expenditure account. Do remember, this will happen only if some instruction is given. Otherwise, in general, we are going to record entrance fees as a revenue income and credit to income and expenditure account. Donations. The charitable institutions receive donations. The amount of donation be regarded as revenue or a capital receipt will depend upon the nature of the donation as to whether it's a general or specific. Let us see the general donations. A donation becomes general when the donor does not lay down any condition upon the use of the amount of donations. General donations are to be treated as revenue receipt irrespective of its size, small or huge. So whatever the amount of donations has been received without specifying any purpose, so it is a general donation and it is to be treated as a revenue receipt, and being a revenue receipt, it has to be credited to income and expenditure account. Specific donation. If the donation has been given for a specific purpose, we call it as specific donation. The example can be given as the donation for building or donation for pavilion, etc. Any specific donation, because it's a capital nature item, so this has to go to balance sheet liability side. Endowment fund. Endowment fund arises from a bequest or gift. The income generated from it is utilized for a specific purpose, while the original amount is kept intact either forever or for a specific period. This amount is also a capital receipt, and because it is a capital receipt, it has to be shown in the balance sheet on the liability side. Next, very important item is legacy. Legacy is the amount which a not-for-profit organization will receive as per will of a deceased person. The donor may or may not specify the conditions for its use. In case no condition is specified, it is considered as general donation and it is recorded as a revenue receipt. Being a revenue receipt, it has to be debited to receipts and payments account and credited to income and expenditure account. And if the condition is specified, in that case, it is considered as specific donation. And because it's a specific donation, it is treated as a capital receipt. Being a receipt, it has to go to receipts and payments account on the debit side. And because it's a capital receipt, it has to be recorded in balance sheet on the liabilities side. Sale of old assets. If an asset is sold, the amount realized is compared with the book value of that asset to ascertain the profit or loss on sale of asset. Profit on sale is credited and loss on sale of asset is debited to income and expenditure account. The book value of the asset sold is deducted from the concerned asset in the balance sheet. I repeat again, the book value of the asset sold is deducted from the concerned asset in the balance sheet. Many times students do make a mistake over here. They deduct the sale value, but it has to be the book value of the asset sold. Payment of honorarium. Let us see what is honorarium. The amount paid to person who is not an employee of the organization is called as honorarium. This is treated as a revenue expense, and because it is treated as a revenue expense, it has to be debited to income and expenditure account. Sale of old newspapers and sports material. The sale of old newspapers is an income and is credited to income and expenditure account. It's a revenue receipt, that's why credited to income and expenditure account. As regards sale of sports material is concerned, it is also considered as income of the organization. Now let us see why it is treated as an income. Sports material consumed is in the nature of depreciation of sports material, so it is shown on the debit side of income and expenditure account. So consumption of sports material is always shown on the debit side of income and expenditure account. If this consumed sports material is sold, So the money realized is in the nature of the income, and that's why it is credited to income and expenditure account. Welcome to part 4 of the chapter Not-for-Profit Organizations. In the previous videos of this chapter, I have tried my best to make you understand the basic concept of an FPO, the financial statements, and the various terms that we use and the various items that are there in an FPO. Let us start with part 4. In this video, I am going to discuss with you the steps to prepare the financial statements, specific items, formats for short sums based on subscriptions, locker's rent, expenses, consumption of material, fund-based accounting. To start with, we have steps to prepare the final accounts of an FPO. The opening balance of cash in hand and bank balance appearing in the receipts and payments account will be shown on the asset side of the opening balance sheet. Please check this. This is a common error by the students while doing the sum. We need to record the opening balance of cash and bank from receipts and payments account in the opening balance sheet. Similarly, closing balance of cash and bank will be shown in the closing balance sheet on the asset side, and if there is a credit balance of bank, that will be shown in the balance sheet on the liability side as bank overdraft. All the items of receipts and payments account on the debit side should be divided into two parts, namely capital receipts and revenue receipts. Why to do this? Because all the capital receipts will be a part of balance sheet liability side, whereas revenue receipts will be a part of income and expenditure account. Capital receipts. Capital receipts include receipts of non-recurring nature like life membership fees, endowment fund, tournament fund, specific donations such as donations for building, legacy, etc. All these capital receipts are shown on the liabilities side of the balance sheet, keeping in mind that expenses related to these funds are deducted from the concerned fund and income related to the concerned fund is added to it. Revenue receipts. All other remaining items appearing on the debit side of receipts and payments account are of revenue nature. They are of recurring nature. They include subscriptions, locker's rent, donations, journal donations, entrance fees, interest received, sale of old newspapers, rent received, etc. All these debit items are shown on the credit side of income and expenditure account after making the necessary adjustments for outstanding, unearned income, etc. The items of receipts and payments account shown on the credit side are also divided into two parts, namely capital expenditure and revenue expenditure. Capital expenditure is all those expenditure which are incurred in the current year but the benefit of which is enjoyed by the organizations over a period longer than 1 year are termed as capital expenditures. For example, furniture, building, land, etc. These expenditures are non-recurring in nature. These items are shown on the asset side of the balance sheet after deducting the amount of depreciation. Revenue expenditure. All those expenditures which are incurred in the current year and the benefit of which is enjoyed in the same accounting period are termed as revenue expenditure. For example, salary, rent, printing and stationery, electricity, advertisement, etc. These items are debited to income and expenditure account after making the necessary adjustments for outstanding and prepaid expenses in the concerned expense. Let us see how the items of expenses and incomes are shown in income and expenditure account. On the expenditure side, you can see there the amount of expense is to be written on the top, and then because you follow the matching concept, because this account is prepared on accrual basis, we need to go for the adjustments like outstanding and prepaid. We can see there in expenses, outstanding current year is added prepaid previous year is also added. Similarly, like two amounts are deducted over here. The two amounts we deducted are prepaid current year and outstanding previous year. To memorize the format, you can see that I have marked with red over there OPPO and CP. OPPO is outstanding, prepaid, outstanding, and CP is current year, previous year, current year, previous year. The same format you can see on the credit side also for the incomes. Incomes in the form of subscriptions can be there or even locus rent. We need to add over there outstanding current year and pre-received previous year. And then you need to deduct the two amounts, pre-received current year and outstanding previous year. To memorize again the format, I want you to go through the word as OPPO and CP. Next is some important points to remember. Following items are never recorded in income and expenditure account. Opening cash and bank balances, because that is a part of receipts and payments account and opening balance sheet. Closing cash and bank balance. Expenses paid for previous year or the following year also. Because we are into income and expenditure account, it follows the matching concept. We need to restrict this account for the items of current year only. Any amount related to previous year or next year will not be recorded over here. Income received for previous year and the next year. Capital receipts are not recorded because in this account we only record the revenue items. Capital payments also will not be recorded in income and expenditure account. Next is, which are the items that we need to include in income and expenditure account? Since income expenditure account is prepared on accrual basis, so adjustments are to be made for expenses outstanding and prepaid. Income outstanding and advance income, that is unearned income. Depreciation, if any. Adjustments for loss or profit on sale of investment and other fixed assets. If some specific fund is given, like prize fund, income and expenses donation pertaining to that fund are adjusted on the liability side of the balance sheet and not in income and expenditure account. This is going to be very important for short sums. Whichever specific fund is given, related to that specific fund, we need to make sure like any expenses or incomes are to be added and deducted in that particular fund in the balance sheet on the liability side only, not in income and expenditure account. If items like tournament receipts and tournament expenses are given, then these items will come in income and expenditure account since tournament fund has not been created in the question. But if tournament fund is there, in that case, the receipts and the expenses will be added and deducted respectively in the balance sheet on the liability side itself. If an asset has been sold during the accounting year, profit or loss on sale will come in income and expenditure account. The book value of the asset sold be deducted from the concerned fixed asset. Which are the formats required for solving sums based on subscriptions? The first format is for the opening balance sheet. Because subscription is an income, we can see there pre-received subscription is a liability and outstanding subscriptions is an asset. The next format is of income and expenditure account. We have discussed the same in the previous slides. On the income side, you can see there by subscriptions and then the format of OPPO and CP. Balance sheet closing the same way as opening. Pre-received will be my liability, and on the asset side you can see there I have mentioned outstanding subscriptions for current year and outstanding subscriptions for previous year as well, if any. Out of the total subscriptions outstanding of previous year, if some amount has been received during the current year, in that case whatever the remaining amount is still outstanding, that has to come in the balance sheet, the closing balance sheet on the asset side. Next is the format required for solving the sums based on locus rent. this will be same as the subscriptions, because subscriptions and lockers rent both are incomes. So let us see the formats one by one. Opening balance sheet, pre-received on the liability side, outstanding on the asset side. Income and expenditure account will be on the income side with the format of OPO and CP. And in the closing balance sheet, again pre-received on the liability side, outstanding on the asset side. Next is the format required for solving the sums based on the expenses. Opening balance sheet can be seen there. Because we are talking about the expenses, now outstanding expenses will be liabilities and prepaid expenses will be assets for us. Income and expenditure account. Expenses do come on the debit side, and again the format of OPO and CP. Closing balance sheet, similar to the opening balance sheet. Outstanding expenses will be appearing on the liability side and prepaid expenses on the asset side. Next is the very important item, that is cost of material consumed during the year. Now we are going to face three different cases over here. Case 1, when opening stock, goods purchased and closing stock are given. In this case, the calculation of goods consumed during the year is very simple. Let us go to the format. You can see there the opening stock is mentioned, in which we add goods purchased during the year. We get the total goods, and out of that we just deduct the closing stock to get the goods consumed during the year. Case 2, when opening stock, closing stock, opening creditors, closing creditors and payment made for such item during the year are given. How do we calculate the consumption? Let us see the steps. The first step is to find the purchases made during the year. To find the purchases made during the year, you can see that the format starts with the payment made during the year, less creditors in the opening, and then we deduct creditors at the end of the year. So finally we get the purchases during the year. Once you get the purchases, it is then very simple to calculate the consumption. Goods consumed during the year, the same format as we have discussed in case 1. Goods consumed during the year will be equal to opening stock plus purchases minus closing stock. So this will give you the goods consumed during the year. Now case 3, when opening stock, closing stock, creditors opening and closing, advance payment opening and closing are given. In this case, we need to calculate payment made for current year. Amount paid during the year is given. In that, we simply add the advances paid in the opening of the year and we deduct the advance at the end of the year. Final amount we derive is payment made for current year. The second format will be there to find out the purchases during the year. So you need to start with the amount that has been derived with the help of the first format, that is payment made for current year. In this, we deduct the creditors in the beginning of the year and we add creditors at the end of the year. So the final amount will be purchases during the year. The third format, the most common, will be for goods consumed during the year. So we can see there the opening stock plus purchases which we have been able to calculate with the help of the second format. Okay, so that purchases will be added to opening stock and deduct the closing stock, we get goods consumed during the year. If these three different formats are not to be followed, then we have another option to calculate the goods consumed during the year. You can simply apply this format also. Amount paid during the year is given to us, in which we need to add the opening stock, closing creditors and opening advances. But then we need to deduct closing stock, opening creditors and closing advances. After addition of these three items and deduction of the remaining three items to amount paid during the year, we get goods consumed during the year. Next is fund-based accounting. Let us see the format of income and expenditure account. Now, generally, we don't have any amount to be recorded in income and expenditure account when fund-based accounting is to be done. But some exceptional cases are there. A common error from students for interest received on other investments. You can see there I have credited to incomes. The word specified over here is other investments. That means this is not related to the investments of the amount received as fund. Maybe there are some other investments. So if you have received interest on any other investments apart from the fund, then that is to be treated as an income and to be credited to income and expenditure account. Also, I told you exceptional cases are always possible. If you find that the expenses are more than the fund that has been received, in that case, that negative amount in the balance sheet has to come to expenditure side. In the balance sheet, how are we going to show this? On the liability side, you can see there, I have taken the example of sports fund. If any donation is there, that donation needs to be added. Interest received has to be added. And if any interest is outstanding, that will be deducted. And again, you can see two more items by way of deduction: sports prizes awarded and sports expenses. So those are the amounts to be deducted, and the final amount, if positive, will be shown in the balance sheet on the liability side itself, and if the amount is negative, in that case only the amount has to go to income and expenditure account on the expenditure side. On the asset side, you can see there percent sports fund investments. So if any sports fund is there and the amount has been invested, so that invested amount has shown as an asset, and what are the face values there, even that needs to be considered and to be written in the inner column. The importance of face value over here is the interest calculation. Whenever you have to calculate interest is calculated on the face value only, not the book value. And if any interest is outstanding, you can see the effect in the balance sheet on the asset side also. On the liability side, we have already added to the fund, and the same amount will be appearing in the balance sheet on the asset side as well. I'm sure I have made myself clear with the concept of not-for-profit organization with the help of these videos. Please apply the knowledge acquired for solving the sums. Thank you so much. Do not forget to like, share and subscribe my channel. God bless you all.